Ladies and gentlemen, welcome back. You're watching episode 5 of RIVEM Outpace Founder Series. Now, this is my flagship show on retail trading and retail investing. And this particular episode is catered towards the retail traders. And we're going to be looking at an industry first approach. Now, before I dive into that, I would like to direct your attention to that special release that we had in between episode 4 and this episode, which was brought to you by my friend Dr. Paul Rodney. Paul Rodney is an investment banker. He was a UK quant head for a very reputable bank in England, and he spoke on regression and forecasting in that special episode. So I urge you to take a look at that episode, and that may help. It is at a basic level, but that may inform and may help how you approach the quantitative aspect of your retail trading journey if you so desire to incorporate modeling. I think it's a value add, and I think it's a good watch. Now, industry first approach, let's dive into this. So where does your trade idea come from? And in an institutional context, if you're working as an analyst, your ideas will either flow from a superior or you will generate it from a generalist or specialist approach. Now, as an analyst, you will be feeding your work up to the portfolio manager, and the extent of the required coverage varies by the type and size of firm that you're attached to. Sectorized coverage generally steps in with firms that pass 500 million US, the US mark, where you will still be covering over 100 companies. At the very high end of specialization, your coverage universe will range in the sub 100 range of companies. But fleshing this single trade idea out can consume as much as 2 weeks in a professional setting, or 60 plus hours of effort. It's a time consuming process because of the necessary due diligence that must be done in this institutional setting. And what is common in both the generalist or specialist approach or orientation is the industry knowledge, and that forms the base of this due diligence process when it's the generalist or specialist approach. Now, in the retail trading environment, where you typically will not have access to the professional reports, you will not have the advanced analytical software, the robust structure of a trading outfit, you need to optimize the resources and limited hours you have available for trading. Now, screening your trading universe by this industry-first approach helps you to develop and leverage your specialized knowledge on its growth, demand, supply, pricing, competition, technological aspects, understanding the relevant cyclical trends, the industry life cycle, past industry failures, recent industry top performers. This edge can then assist in your security-specific analysis. If you're now getting started, you need to make sense of the universe of possible trades, and focusing on an industry-first approach to screen and find your trade ideas is a less daunting pathway. I started to trade at the time when I was studying energy trading and finance in London, and for several years, still to this day, oil and gas securities are a core component of my trading. Now, frankly, you do not need formal education on that specific industry that you have decided to retail trade. Getting up to speed on your industry of choice can easily commence from a Google search for free industry primers. I'm going to repeat that. Industry primers. Scrape the internet for as recent, and even do it in a chronological manner, where you're scraping from the oldest primers that you can find to the newest primers. You create a separate folder, and then you create a document where you're saving your snippets and your sections that you have highlighted for ease of reference as you go along this idea generation process. So I must emphasize again, industry primers are an excellent starting place for you to learn. Now, spend the time to fully immerse yourself into an industry and create an industry map. Understand the type of instruments available and those accessible to you at the retail trading level. Map the players and the various sections with a focus on which section has a tailwind or which section is at risk. Now, if you pick oil and gas, as your area of focus, visit our website. Our website is currently down, but we'll have it up because it's currently being updated. We have this Facebook page, if you're looking at it from my personal Facebook page. We have several videos explaining the petroleum industry, and even at the retail trading level on technical trading guidance. Now, this coupled with the free primers are an excellent base for you to start your journey. Now, a subscription to media providers such as the Financial Times and Bloomberg News can also be useful. For example, I'm not going to mention any specific security because this show does not offer buy or sell advice. That's a disclaimer that I must put out there. But let's say that you're in this industry learning phase and you encounter an article on SAF, on sustainable aviation fuel, which piques your interest, and you learn that there is the leading company in the space. There's speculation as to whether that's a specific security is undervalued, and you know, based on your due diligence that you're going to execute, that this is a policy-mandated market. Governments are prone to flip-flopping on particularly the clean energy pursuit and the green targets, and currently the market is taking a hit, and your opportunity flag there is to determine whether this is indeed a security that is undervalued, and whether in this particular SAF and biodiesel space the market is going to rebound. Now, that is an idea of how you can simply, with an industry focus, have a specific trade idea that you vet through your due diligence process. If you're not focused on performing a fundamental analysis and looking at the stock, and if you want to instead focus on oil and gas futures, for example, and you can engage in spread betting or general spec trading. Now, with spread trading, you're focusing on the price relationships between two futures contracts. And that requires you to buy one contract and sell another. Now, it can be a trading strategy based on geographical spreads, on time spreads, or commodity spreads. Now, remember to consider what type of retail products you have access to. If you're commodity trading, such as in oil and gas, it is unlikely at this retail trading level that you will be trading the primary contracts. And in the cases of futures, you're not actually acquiring an actual futures contract. Now, that is my approach, but at the retail trading level, that is highly unlikely that is going to be your approach. Now, the substantive futures and options trading on oil and gas or energy-related commodities takes place on NYMEX and ICE, the New York Mercantile Exchange or the Intercontinental Exchange. I focus on ICE, on the Intercontinental Exchange, and I have trading from ICE. Now, in terms of these primary oil and gas contracts, for oil and oil products, for example, there is ICE Brent, there is ICE WTI. WTI is really a NYMEX contract, but there is a version in ICE. There's ICE gas oil, there's ICE low sulfur gas oil, there is ICE heating oil, ICE New York Harbor gasoline. For natural gas, there is the Dutch TTF natural gas futures, there is the UK National Balancing Point NBP natural gas futures. Now, if you are platform trading, such as on IG, you're likely dealing in contract for difference on the underlying futures price. So, for example, ICE Brent. Again, you are likely dealing with a CFD. You're not actually acquiring a futures contract, or it's a spread bet type of product. And when you place your buy order, you're entering into a CFD with the platform provider and not acquiring the futures contract listed on ICE. That's an important distinction for you to understand. However, some deeper along a retail trading journey, if you have access to an established broker, you may be able to establish, for example, actual mini futures contracts and positions in them, which is a far more approachable way of getting into futures trading as opposed to the full version of those contracts. You can decide based on your industry first approach what you'd like to trade. Then the main divide becomes, are you going to be doing fundamental stock analysis or are you going to be trading commodities? Now, if you're doing the fundamental stock analysis, that is more so being driven by discounting expected cash flows. if you're dealing in commodities, like I deal with in a primary manner, you will be looking at more so macro factors, supply and demand dynamics. An important disclaimer to make, second disclaimer for this episode is that this is from a retail trading POV of this industry force approach. If you're a retail investor seeking to construct a portfolio of securities that optimizes risk return parameters and delivers a specific diversification benefit as well as an inflation hedge, that is a distinct process which I may cover in a different, in another episode. So thank you for tuning into this episode, episode 5. Join me in episode 6, the last episode for the first season of the show, where I'll be speaking and interviewing former and current traders on their retail trading journey, and I will also be speaking to an institutional trader. So on that episode, you will get a lot of direct insights from other traders. So join me then.